Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new month of May. So during my Asian session live market analysis and the forecast webinar on 1st of May between 5 and 5:30 GMT, I'll be giving the forecast for the week 1st to 15th of May. It will be session-wise forecast. Besides, I'll also do the market reading and also explain to you how the trading could be done during that of the monthly trend reversal time using the hedging. Besides, I'll also give the trade calls for you to implement in demo trading platform to find the suitability of such calls. So first of all, the forecast for this particular week. 1st to 5th of May is the month beginning week. We have seen the month end week last week, how volatile the market was, how aggressively they gained the levels in the case of Euro GBP as well as USD yen and also USD CAD, and nominally dropped Australian dollar as well as USD CHF. So that is how they make the contrarian move, but that will be sequential. So sequential trend reversal moves are part of the game. So we need to understand what is the sequence. First of all, they handle the commodity pairs and the commodity crosses to start with. Then subsequently, they handle yen and yen crosses. Then they make big moves in the case of majors. And finally, they handle the European crosses. So when they are handling one set of pairs, the other pairs will be making range-bound swings. So that we need to understand. So if you take positions according to their sequence of big moves, they could do it in the market. You'll be able to see that every trade you are able to close it within the same day and book profit. So understand what the players intend to do and trade in line with them, then automatically you'll find that market trading is a rewarding and interesting aspect. So let me give you the forecast part of it. It is the first week of May. The monthly trend reversal is to be there till end of the week. And if you watch that today, even though it is a holiday in many places in the world, they are expected to make the swing and come up move during that of the Japanese session, followed by that slow slide during the European as well as US session. Then they could continue the slide tomorrow during that of the Japanese session and form up little bit during the European session and again make the slide during the US session. Then continue the slide on Wednesday and form up during European and US sessions of Wednesday. Then Thursday, 4th of May, they are expected to make a dip and firm up move, followed by that rise and firm up. Before making the slide on Friday, a nominal firm up before that of the non-farm payroll, and then drop the market during after that of the non-farm payroll. So today we are on 1st of May. So I am giving the forecast for the non-farm payroll here that the players are expected to slowly drop the market and continue to drop the market after that of the non-farm payroll. Then are they going to continue the drop afterwards? No. From the second week of May, they are expected to make the trending move on the upside. So swing and rise moves are expected to happen after this. So during that of the trend reversal time, they set the high as well as the low as the extreme levels. Why they do it? In order to handle the derivative market. Last week we have seen that those who had taken the positions in the extreme level in the derivative market like futures and the option, forward cover, etc., they were compelled to close with a loss because the players made a quick drop and a quick rise moves. Similar to that, they are expected to make a nominal rise and a quick drop in the market in order to set the high and the low as extreme high and the low for the week. And this volatile move, they do it every month beginning and the month in time. So you can do only the swing trades during that particular time frame. So envisage the drop and then you can position yourself at the lower level, the buy positions. Then they will make the week beginning false move on 8th of May. Then subsequently they will start gaining the levels. So don't be in a hurry. You can do sell and buy trade and you can wait for the market to come down and then try to do the buy and sell trade. If you've got any doubt, you can ask me over the question answer window. I will answer those questions which are asked here. Then the range in which the currencies are expected to swing during this particular week. Euro could come down to 1.0750 and the high could be 1.1075. Then again GBP could come down to 1.2650 and then it could set the high as 1.3075. They are all mathematically derived levels based on the limitations of the players. Then yen could come down to 109.75 level. The high could be 115 area. Then CHF could make a range bound swings from the parity to the 0.9825 area. Then Canadian dollar from the 1.3675 area, it could come down to the 1.32 area. Good drop they could make in order to handle the derivative market. At the moment, they are doing the high level consolidation with frequent upward stopping in the case of USD CAD. Then in the case of Australian dollar, they are trying to handle the lower level in order to gain again the levels. So the tips are buy opportunities and they will start gaining the levels. To start with, they will handle the commodity price and the commodity process. So near low or great buy opportunities. So the market is expected to make a downward move to start with. And in between, they will touch the highs. So quick rise and the quick drops could be seen as a volatile move. So aim only for the swing trade and watch the session-wise forecast, and then accordingly you can take the positions. So each session you can just watch what is the type of move they are going to do, and overall what is the type of move they are going to do. So in line with the overall move, you can take positions. Quick rise, you can take sell positions, and when they drop, you try to book profit during this particular week. Now, we will do the market reading to fine tune the forecast. Euro formed the low 1.0857, the high is 1.0947. So they are not breached the lower, the high it is in the middle level. Then GBP 1.2905 is the low, 1.2944 is the high, they are not breached. Then yen 111.21 is the low, 111.73 was the high, and they just breached and went up to 75, started coming down. Then in the case of CHF, 99.40 is the low, 99.66 is the high. They are not breached the low or the high. And Canadian dollar, 1.3638 is the low and 1.3672 is the high. They just breached the high and holding around that of 3672. They have made a brief upward stop in order to make the slide. Then Australian dollar, 0.7471 is the low, 0.7491 is the high. They are not breached the low or the high. So only in the case of yen and that of the Canadian dollar, they just nominally breached the high and come down. So which indicates that they could make a brief upward stop and start making the slide. In the case of USD and USD CAD to start with. Then they could make the contrarian move of dropping euro and GBP as well. So last week we have seen that euro and GBP they gained, along with that USDN also gained. This week they are expected to make the opposite to it. Okay, Bren has got a question. Will they handle the yen pair and yen crosses after they handle the commodity pairs? Yes. So today they will handle the commodity pairs. They could hold yen in a narrow range, and also euro and GBP. They could make a nominal slide and then start making the slide in the case of USD yen. That way they will slowly move the yen crosses on the downside. Hope we are able to understand, right? So to start with, they could make the slide in the case of yen and USD CAD. Then USD CAD might make more drop as the commodity crosses the handle first, and they can use any data release or any other aspect as the trigger and then make a quick drop. Then we will come across the USD yen, and what they do is before that euro and GBP are expected to make the slide. Then USD yen will hold, take out the stops if needed above that of the high, and start making the slide. And as I explained many times, that we can find out what pair they will move first. So any currency which has made more net change will be the first one to drop, like GBP. Then followed by that is Australian dollar, and finally euro. Then as far as the denominator currencies are concerned, any currency which is making the less positive net change are expected to make the slide. Then USD CHF to start with, followed by that of USD yen, and finally Canadian dollar, USD CAD. So that is how they will make the slide. So watch the move and understand how sequentially they do it, and also you can understand how it is predictable for us by looking into that of the net changes. Now the trades for the day, when they make a breakout above that of the initial high or below that of the initial low, we can do either way trades. Above that of the initial high, we can take a sell. Below that of the initial low, we can take a buy. And do either way trades. And I also recommended here the hedge order, the buy stop or the sell stop. The buy stop for that of the sell and buy trade sell stop for that of the buy and sell trade. So when you take a buy near that of the low or near that of the new low, you can keep the hedge order to limit the risk, and they will firm up. At that time, you keep stop at entry and remove the hedge order. Then subsequently trail the stop in the profit-making position, maintaining about 15 to 25 pips away from the market. And once they start gaining the level, these trailing stops will automatically gain. When they suddenly reverse, the trailing stop will close the position with a profit. So that way, you'll be able to protect your profit and re-enter again a buy position after making further drop. So that way, you can do either a sell and buy trade or a buy and sell trade. Buy when they are near that of the low or doing a breakout near that of the low. Sell when they are making a breakout near that of the high. These are all the market timings, so Japanese, European, and the US sessions. So you can find out that early in the late sessions they handle the majors, and the mid sessions they handle the crosses. So when you are focusing on the crosses, watch the pairs, the majors during that of the mid session. They will not breach the high or the low, but the corresponding crosses will be making it. How it is possible? When they make contrarian move in that of the majors, such breaching of the high and the low happen in the case of the crosses. So that you can watch and accordingly take positions. So if you've got any doubt, kindly ask me the questions here. I'll be willing to answer those questions. I will show you the forecast slide for the people who are interested to know more about the market moves. Being first week of May, we'll come across very quick moves happening in the market. Players are expected to make the volatile moves during the monthly trend reversal time, irrespective of the volume. So don't think that the market is simply holding because of lack of volume and things like that. Suddenly they will make whips or moves in the market. So when it is stagnant or just making a range bound move or consolidation, you simply watch. When they make an upward breakout and stop cutting the new high for 30 minutes, take a sell. When they make a downward breakout, stop cutting the new low for more than 30 minutes, take a buy. Then you will come across the market will give you the profit. They will not make one-sided drop or one-sided rise. They will make volatile moves. So during such volatile moves, you will be able to book profit, whether you do a buy and sell trade or a sell and buy trade. But don't think of a breakout trade of buy above that of the high or sell below that of the low. Because the players know, many of the traders do such trades and they try to make very nice stop-ins for them. So don't lose your equity when they make big stop-ins that way. Then the range in which the currencies are expected to swing is shown here. So these webinars are recorded and you'll find out in FX Street, which is listed. And also you come across in YouTube, it is being listed. So you can just note down either the levels or just take a screenshot if needed, or you can just refer to the webinar on a daily basis and try to find out in what way the players intend to make the moves in the market, and try to fine-tune the forecast using the market reading technique and then trade accordingly. Then another question: the forex pairs are not in any way connected to that of the futures. Yes. See, the spot market is different from that of the futures market. When there is a big rise in the case of spot market, then if the players intend to make a drop after that, then they may not make any rise in the futures market. Then you will be wondering why it is like this. And what happens at that time, many traders, they take sell positions in the spot and buy it in the future as an arbitrage. But the players make differential moves. Sometimes they make the move in a big way in the futures market and say that it is on premium. Otherwise, they will simply say that it is on a discount, so there is no rise. So it all depends upon how the traders are taking positions. The predominant of the traders have taken long positions in the future, they don't rise. They simply say that it is available on discount. But if predominant of the traders are having short position, then they make a bigger rise than that of the spot market and say that it is available on premium. That is why the rate, futures rate is higher than that of the spot. So don't verbatim compare the spot market with that of the futures. Futures move again depends upon the volume there. And also they handle it in such a way that different levels in futures and options, traders commit positions. Then only they make the moves. Unlike spot market, in spot market they make the volatile moves and they do it mainly to attract the traders to participate. But in the futures market, the moves will be very, very nominal. Suddenly you'll come across big moves happening in the market. So you should be able to identify the difference before committing positions in such markets. Any other question, please? So they pay attention to that of the bid and the ask ratio. Yes. See, they are actually the writers. That means they only quote such levels. The players, through that of the arms of the bank, quote the bid and the ask. And if the traders predominantly take the put call, then they make further rise or don't drop, even though there is a drop in the case of the spot market. Then induce them to do the short covering. Then afterwards they will make the drop. So they take whether not exactly the ratio between the bid and the ask. They mainly take into consideration the volume of traders taken the put option and the call option, or taken the sell side or the buy side. Depending upon that, they try to bring in volatile move and try to hit the stop. So both the people, they are not here to give any reward to the traders. Accidentally, we make profit if we trade along with them. Otherwise, they are the last person to have any philanthropic idea of giving profit to the traders. Any other question, please? Okay, then I try to conclude the webinar. I take this opportunity to thank FX Street for the facilities provided to present the webinar. And those of you who are interested in my forecast, feel free to ask questions during the webinar or after the webinar time. I am willing to help you without expecting any monetary benefit from you, because I want you traders to get rid of the market fear and trade wisely and to earn money from the trader players. Because the players continue to trap the traders, don't become again and again victim to their act. That will not help you. Instead, it helps only the players. But the players will make definitely tricks. So we need to read the tricks and try to understand and try to laugh at them rather than becoming afraid of them, because they will not be in a position to come to your home and ask you to do wrong trades. They can only trigger your fear, thereby you are forced to do the wrong trades, because your equity becomes a limitation. And when you take more positions, the positions, when they all make loss, then you get the margin fear. So try to limit your positions and try to earn money in your positions, and then think of another position. You will find that you will be able to sustain in the market irrespective of the volatile moves. And if you hold the position for a few days, you will be able to definitely book profit. So during the trend reversal time, if you are caught on the wrong side, you need to patiently wait with adequate equity so that there is no margin call. Don't add further positions in the name of averaging. That may lead to over trading. Then you will be able to see that such positions, unfavorable positions, you are able to book profit, and then subsequently you can think of fresh trades, so that you'll be able to see that every trade you are able to earn money and you find the market fear goes away. So control your emotions and control your urge to take more positions. Then you will be able to see that market rewards you. And I always say that market rewards patience and not impulsiveness. Wish you all the best in your trades. See you on Friday. I'll come back with the review of the forecast, what I have given it now, and find out how exactly the market is making moves in line with the other forecast. So that will give you more strength to follow the forecast. Wish you all the best in your trades. See you on Friday.